Hey there, deep diving friend. Ready to ditch those spreadsheets? We're breaking down BCE's second quarter earnings report from August 2024.
Yeah, we've got the whole,
The press release, shareholder report earnings, call transcript.
it's a gold mine. The whole shebang.
Yeah, this isn't just about numbers. It's a glimpse into how Canada's telecom giant is navigating a rapidly changing industry.
Okay, so forget the jargon. What's the headline? Did BCE rake it in this quarter?
They did see a hefty increase in net earnings, a 52.1% jump compared to the second quarter of 2023, but that's not the whole story. What's really interesting is where that growth is coming from. Fiber internet and prepaid wireless services are their star performers.
Fiber internet. They snagged their second-best Q2 result for new subscribers since 2007. That's practically ancient history in the tech world. Why such a surge in fiber? Speed and reliability are the name of the game these days. People are craving lightning-fast internet, and fiber delivers. Plus, BCE has been cleverly weaving those internet and mobile bundles into the mix. In areas with fiber, they saw an 18% jump in households subscribing to both.
Bundling the classic better together strategy. Speaking of strategy, the earnings release kept mentioning an intense pricing environment. Sounds a bit like walking through a financial war zone.
It's definitely a fierce battleground out there, and BCE is feeling the heat, especially in their wireless division. During the earnings call, they even admitted to facing the lowest pricing environment in the history of wireless in Canada. That's a direct quote.
Whoa, that's
Yeah.
not just intense, that's historic. So how are they holding their own against those cutthroat competitors? Constant price wars can't be good for profits.
They're playing it smart, focusing on attracting what they call higher value customers. Think of those who are willing to spend a bit more for premium services and those attractive bundles.
Makes sense. Instead of a race to the bottom with prices, they're aiming for a market segment that values quality and a comprehensive package. But what about the impressive jump in prepaid numbers? That really stood out to me.
You're right to zero in on that. Prepaid net additions skyrocketed by a staggering 269% year over year. That's largely fueled by their no-frills brands like Lucky Mobile, which are proving to be a hit with newcomers to Canada.
So they're strategically targeting different segments of the market, budget-friendly prepaid for new Canadians, and those premium bundles for customers who want it all clever.
Exactly. And here's where it gets even more intriguing. They're bringing in the big guns. AI. BCE is using artificial intelligence to manage costs and give their customer service a boost.
Okay, hold on. AI running a telecom company. Now that's what I call a plot twist. Tell me more.
It's not quite robots taking over just yet. Think of AI as their secret weapon for efficiency. They're using it to personalize the customer experience, streamline those sometimes dreaded service calls, and even spot opportunities to upsell. It's about working smarter, not harder, especially in such a competitive market.
So instead of replacing humans, AI is like their high-tech sidekick. Using AI to handle the routine stuff frees up their human employees to focus on more complex issues.
Precisely. And remember those cost-saving measures they've been hinting at? Well, AI is only part of the equation. BCE is also looking at workforce restructuring to optimize their operations.
Right, they announced plans to reduce their workforce earlier this year. Not always an easy decision, but sometimes necessary for a company to adapt and stay competitive. But are those AI investments paying off? That's the million-dollar question.
It's still early days, but BCE seems optimistic about AI's potential to revolutionize their operations. Only time will tell how much it will impact their bottom line. What's fascinating is how they're balancing cost-cutting with strategic investments in areas like, get this, digital media.
Now that's a segue I can get behind. Let's talk about BCE's digital game plan. Their digital revenue shot up by 23% this quarter. That's not just a hop, that's a full-on leap.
You said it. They're pouring resources into digital advertising solutions. Things like their programmatic advertising marketplace and addressable TV Plus. Their streaming services like Crave are seeing some serious growth.
They also mentioned something called fast channels in the press release. Now, forgive me if my streaming knowledge is a little rusty, but those are the free ad-supported channels, right?
You got it. Think of them like the evolution of traditional TV. Instead of cable, they're popping up on platforms like Pluto TV and Zumo, completely free, supported by ads, and packed with a variety of content. BCE launched 10 of these fast channels back in April, and they've even snagged new distribution deals with big players like Plex and the Roku channel.
So they're not just clinging to the old ways, they're diving headfirst into the world of streaming and reaching viewers wherever they are.
Exactly. They're all about adapting to the way people consume content. In fact, during their upfront presentation, they were buzzing about digital advertising partnerships with companies you might not expect, like TikTok and Dotdash Meredith.
TikTok? Wait, isn't that where...
Teenagers dance and do those viral challenges. Yes, but it's also a goldmine for reaching a younger audience. BCE is teaming up with TikTok Pulse Premiere, which lets advertisers slide their ads in alongside premium content. Pretty fabby, right?
Okay, that's actually pretty brilliant. If you can't beat the TikTok generation, join them. But let's pivot for a moment. Remember those government policy shifts we mentioned earlier? How are those impacting BCE's grand plans?
They're a major factor in BCE's decision to pump the brakes on capital expenditures this year, especially when it comes to their fiber build-out. They're also facing pressure from regulators to open up their fiber network to competitors at wholesale rates.
So the government is basically saying, hey, share your toys. On the one hand, promoting competition is great for consumers. On the other hand, it could make companies like BCE think twice about investing in infrastructure. It's a tough situation.
It's a delicate balancing act. The government wants to boost competition, but there's a risk of disincentivizing companies from building out those essential networks.
It's a classic case of good intentions with potentially complicated outcomes. Despite these regulatory hurdles, BCE seems to be navigating the storm quite well. They're sticking to their financial guns and reconfirming their guidance for the year, even with the reduced capital expenditures.
And they're making some bold moves, like their plan to divest Northwestel, their telecommunications arm in northern Canada, for a cool $1 billion.
Whoa, that's a big deal. Why sell off a chunk of their business like that?
It's all about shoring up their finances. They're planning to use the proceeds to pay down debt and gain some financial wiggle room amidst all the regulatory uncertainty.
So it's like they're tightening their belts in some areas while strategically investing in areas with huge growth potential, like digital media and AI. Talk about a balancing act.
Exactly. They're not just reacting to government policies, they're proactively adapting their strategy and focusing on areas where they have more control.
And speaking of control, let's circle back to those cost-saving measures, specifically workforce restructuring. Are those cost savings reflected in their operating expenses?
They are indeed. BCE is becoming increasingly reliant on AI and automation to streamline operations and reduce their dependence on labor. It's a trend we're seeing across industries.
While that makes sense from a business standpoint, there's a human side to consider. Some argue that relying too heavily on AI-powered tools can lead to a less personal, even dehumanizing customer experience.
It's a valid concern, and finding the right balance is crucial. AI is great for handling routine tasks and providing quick answers, but when it comes to complex issues, or when a customer simply wants that human touch, nothing beats a well-trained, empathetic customer service agent.
Absolutely. No one wants to feel like they're talking to a robot.
BCE seems to be aware of this. They've emphasized that their AI tools are designed to work alongside their human workforce, not replace them entirely. It's about augmenting human capabilities, not erasing them.
Let's hope they stick to that approach. After all, customer loyalty isn't built on algorithms alone. It's about building genuine connections.
Couldn't agree more. Which brings us to another interesting aspect of BCE's strategy, the power of bundling. They're seeing a growing number of customers signing up for these bundled packages, which is excellent news for their subscriber lifetime value.
Bundling makes sense from a business perspective. It's convenient, it simplifies things for the customer, and it can lead to greater customer loyalty. It's a win-win, right?
It seems that way, but in a world that's increasingly obsessed with customization and flexibility, it begs the question, is bundling truly what consumers crave? Or is it just the most straightforward option that companies like BCE are currently offering?
That's a great question. It makes you wonder what the future holds for telecom packages. Will we be able to pick and choose our services like we're building a personalized pizza?
That's the million-dollar question, isn't it? And this whole idea of customization isn't just limited to telecom. Consumers across the board are craving experiences tailored just for them.
So instead of those preset bundles, are we heading towards a telecom buffet where you can load up your plate with exactly what you want? No more paying for services you never touch.
It's a tantalizing thought, isn't it? And technology is making this kind of personalization more achievable than ever before. But it also throws some curveballs at companies like BCE.
Yeah, I imagine juggling all those individual choices and preferences could get messy. Plus, they'd have to crack the code on pricing those custom bundles in a way that makes sense for both the customer and their bottom line.
You hit the nail on the head. It's a tightrope walk for sure.
Oh, God.
But BCE seems to be embracing the challenge. Their investments in AI and digital technology might just be the key to navigating this shift toward a more personalized customer experience.
Oh, so?
Imagine AI as their secret weapon for understanding their customers better than ever before. It can analyze mountains of customer data, spot patterns in their usage, and even predict what they might need before they even realize it.
So AI becomes their customer whisperer, guiding them towards the perfect telecom package. No more scrolling through endless options or ending up with services they never use.
Precisely. It transforms the customer experience from a one-size-fits-all model to a tailored, personalized journey. And for BCE, happier customers usually translate into more loyal customers.
That's the dream, right? A telecom company that actually gets you. But for now, it seems like bundling is still the reigning champ.
For now, yes.
hmm
But as technology keeps evolving at a breakneck pace and consumers demand more control over their choices, the future of telecom could look radically different.
Okay, so we've talked about BCE's digital moves and their dance with AI, but let's not forget about those regulatory shifts we touched on earlier. How are those impacting DCE's bottom line?
They've definitely played a role in BCE's decision to tighten the purse strings when it comes to capital expenditures, particularly their ambitious fiber network rollout. They're also facing pressure from regulators to play nice and share their fiber infrastructure with competitors at wholesale rates.
It's a classic case of balancing competing interests. On the one hand, fostering competition is generally good news for consumers. It can lead to lower prices and more choices. But on the other hand, if companies like DCE feel like their investments are being undercut, it could stifle innovation and slow down the rollout of essential infrastructure.
Exactly. It's a delicate dance between promoting competition and ensuring that companies have the incentive to invest in cutting-edge technology. And BCE isn't just sitting back and waiting to see how the regulatory landscape unfolds.
Right, they've made it clear they're not afraid to make bold moves, like their decision to sell Northwestel, which came as a bit of a surprise. What's the story there? Why divest a part of their business that was, at least on the surface, generating a steady stream of revenue?
It's a strategic move to strengthen their financial foundation. They're planning to use the proceeds from the sale to pay down debt, giving them more financial breathing room and flexibility. Remember, they're facing pressure from those government-mandated pricing adjustments, and they're investing heavily in areas like 5G and fiber optic networks. Freeing up some cash flow is a strategic move.
It's like they're playing a game of chess, strategically moving their pieces around the board to adapt to the changing landscape.
Precisely. They're not just reacting, they're thinking several steps ahead and positioning themselves for long-term success.
And part of that long-term strategy seems to involve leaning into those cost-saving measures, particularly when it comes to workforce optimization.
Absolutely. BCE, like many companies in today's environment, is trying to find the sweet spot between leveraging technology and managing their workforce costs. They've implemented some workforce restructuring measures, and they're increasingly turning to AI and automation to streamline operations and reduce their reliance on manual labor.
We talked about the potential downsides of over-relying on AI earlier, especially when it comes to customer experience. But from a purely financial perspective, these moves make sense. They're freeing up resources that can be reinvested in growth areas like 5G, fiber, and digital content.
Exactly. And it's important to remember that this isn't just about cutting costs. It's about working smarter and investing in technologies that can enhance their operations and ultimately benefit the customer.
So they're trimming the fat, so to speak, to fuel their future endeavors. Speaking of the future, BCE seems to be placing a big bet on digital media. Let's dive into that a bit deeper. What's their game plan in this rapidly evolving media landscape?
They're going all in on becoming a digital-first media powerhouse.
They're investing heavily in their streaming platform, Crave. And they're making waves in the advertising world with innovative solutions like programmatic advertising and addressable TV.
And let's not forget those fast channels we talked about earlier. Launching those free ad-supported channels was a strategic move to tap into the growing trend of cord cutting and appeal to viewers who are ditching traditional cable in favor of streaming.
It's like they're casting a wider net, trying to reel in viewers across different platforms and demographics. They're not just relying on those old school methods anymore.
Exactly. They're meeting viewers where they are, whether it's on their phones, their laptops, or their connected TVs. And remember their partnership with TikTok. That raised some eyebrows, but it's a brilliant move to tap into that younger, highly engaged audience.
It's like they're playing 3D chess while everyone else is still stuck on checkers. But speaking of strategic moves, we've covered a lot of ground here, from BCE's financial performance and their AI ambitions to their digital media maneuvers and those looming regulatory challenges. It's a lot to digest.
It is, and it highlights how adaptable companies like BCE need to be in today's ever-changing landscape.
Hmm.
They're not just reacting to industry shifts, they're proactively shaping their destiny.
And they're not afraid to make tough decisions, whether it's restructuring their workforce, divesting certain assets, or embracing emerging technologies like AI.
It's all about balancing short-term wins with long-term vision. And speaking of long-term, that question you asked earlier about the future of telecom packages really got me thinking. Imagine a world where your telecom provider knows your needs so well that they can curate a package tailored specifically for you.
No more sifting through endless bundles, hoping to find one that checks most of the boxes. It's like having a personal telecom concierge.
Exactly, and AI could be the key to making this a reality. Imagine AI analyzing your data, your usage patterns, your preferences, even your location, to create a truly personalized telecom experience.
It sounds like something out of a sci-fi movie. But in a world where personalization is becoming the expectation, it might not be that far off.
And for BCE, this could be a game changer. By offering these hyper-personalized experiences, they could cultivate a whole new level of customer loyalty.
It's a win-win. Customers get exactly what they want, when and how they want it, and BCE solidifies its position as a customer-centric innovator.
It's a compelling vision of the future, isn't it? And while we don't have a crystal ball, one thing's for sure, BCE is on a mission to stay ahead of the curve and shape the future of the telecom industry.
And on that note, we'll have to wrap up this deep dive. But it's not really goodbye, is it? It's more like see you in the metaverse, where personalized telecom bundles roam free.
I'll be there, virtually.
Thanks for joining us on this deep dive, and catch you next time for more Knowledge Nuggets.